Welcome back to Keen on Australia. I'm your host, Darren Keen, and we talk about all things moving to Australia, whether that's when you're first setting up, what you need to do when you get here, what you should do before you even leave. And we regularly interview people that have made the move, how they found it, what they wish they knew before they moved. And then we have specialist guests on. They'll talk about topics such as buying a home, buying a car, understanding super and health insurance, tax, all those sorts of things that are a little bit different when you move here. So we regularly bring those guests on and we let them tell what they can in the way of things they can help you. But please remember, this is an educational show and it is only general information. I highly recommend you sort out what you need for your specific needs from a professional. On today's show, we're going to be talking home loans and we're with a mortgage broker. Damien moved here himself from New Zealand. So how about you tell us a bit about yourself, Damien?
I've been here about 25 years now. Been working in various industries, but largely in banking in Australia for since 2000. Came and gone with a few different roles, and I'm now a mortgage broker based in Melbourne. So I've been a broker now for about 8 years.
Nice. So what's the difference between a mortgage broker and the bank?
Well, the big one is that I can give you a choice. That's probably the easiest and clearest example. But the second part of that is, if one bank doesn't suit you with me, I can direct you to another one. Whereas if you're at one of the big four, for example, and all they're going to do is decline you, they're not going to tell you that down the street is someone who will approve a loan for you.
So, and you only work with banks, or is there other institutions you can borrow from as well?
No, there's a range of lenders in anything from a typical bank on the street to organisations that are only broker available via brokers, and there's also private lenders as well, and for very particular cases. But that's the range. I've got about 40 odd different lenders I can access immediately, and then there's others beside that as well.
Awesome. So all of our shows are general education. Obviously, we highly recommend if anyone wants to look into anything with the details, they seek someone out and get their advice specifically. But with your industry too, what's the difference between general advice and specific advice?
Well, general advice is the sort of thing we're doing now. It's just here's some basic information. From that, you're probably going to have some other questions, and that's where it really gets into the specific and personal advice. The big one is, and this is where a lot of people make a mistake, is they take an example that we might use, for example, and they'll run out and go, I can do that too. But the difference is, just as everyone has a different car because of different needs, that's the same with lending. You're going to have small things could be quite a difference, whether it be a different type of income, a different job, or change jobs, bonus income, salary versus salary income, commission income, that all is different. And that requires, in most cases, a different lender. So you can't just walk into one place and expect everything to be the same or to work the same as the place down the street. So again, a broker has a choice, and we can go, this one will work for you now. That one might work for you in 6 months, 12 months, 2 years' time.
Nice. And that's something I see regularly with getting asked questions on the internet all the time too. I actually had someone today arguing with me about something, and a person asked a question about Queensland, and someone else gave an answer and said, you can clearly do X, Y, Z. And when I asked them about where they did X, Y, Z, they said in Adelaide in South Australia. So obviously that's another big one for anyone that's looking to move to Australia, is understanding, obviously, we have multiple states and territories and the laws can be quite different between them. But with all those states and territories as a broker, can you lend to people in any state or territory, or are you stuck in one? Or
Yeah, as a broker, I can work across the entire country, which is great. So I can work for anyone who's might be Alice Springs and Brisbane and Hobart, Perth, or Sydney or Melbourne. Makes it really easy. Where it becomes a little bit different, though, is you do need legal advice for each state. So this is where your conveyancer or a solicitor would come in, and they give you the guidance and advice and take you through the settlement for your purchase in those states, because the rules are different in each state.
cool. So a common question we see and we get a lot, you got someone moving, say, from the UK, New Zealand, wherever, and they want to buy a home when they get here. They want to buy one when they first land, and say they've got 25% deposit with them. We'll say 20% deposit, 5% to cover the costs. What's the story? A lot of people tell me that, oh, look, you can't get a loan for 6 to 12 months or whatever. You got to have a job for so long. What's the story? Someone that comes straight off the boat, they've got a good deposit and some good income. What can they get a home?
That's a regular sort of question for myself. The big thing is getting the loan, that's the question, not necessarily buying the property. You can, in most cases, it's one payslip, or even two with the contract for your job. So if you're just new in the country, you've got your deposit, you've got a payslip and a contract, we can go ahead with a number of lenders. Some lenders again will go no to that, but it just comes down to the individual cases again. So, but if you're self-employed, for example, that might push out to a much longer period, maybe a minimum of 6 months or 12 months, till you've got sort of some tax history here in Australia before you can move anywhere.
What about if you majorly change job? Does that affect it? Like if you were, say, a plumber in the UK and you came here and became, I don't know, a truck driver or a retail salesperson or something, does that affect it or?
It can do, although having said that, the salary or PAYG income is probably the easiest to deal with. But if you have had a major career change, again, different banks will take that differently. Some will go, yep, fine, you've got a pay slip, we'll take it on. Others might go, we need to see some history in that employment. So that might be a 6 or a 12-month sort of stand down until that goes ahead. Again, there are lenders that will possibly take that on, but at a premium. So you'll pay perhaps higher fees or higher interest rate in the short term until you've got that history built up.
So I suppose that's one of the advantages again with a broker, is it? That it's not that you get a no, you just might get a yes, but it's more expensive from a different place.
Yeah, and it's a short-term thing. The idea with a broker is that it's a relationship, it's a long-term thing. So okay, we've got a situation that doesn't quite work for this lender or the best case scenario now. So we'll move you into a lender that will do the job right now, and then we can change that at a later stage. So in a year and 2 years or something like that, we'll come back with a different lender, improve the interest rate, improve the situation, and that can be done 2 or 3 times if need be. I've done that, for example, with people with bad credit. Got them out of the sticky situation, then moved on to a better lender and a better lender to get the best result.
Cool. And what you'd normally review that yearly with them, or is it you sort of work a plan out with them when we should be sitting down again to review that?
Yeah, it's usually to an individual circumstances, but typically I would look at around a 2 years timeline. Some maybe shorter than that, especially the bad credit, for example. If they've got something we can clean up immediately, maybe in 12 months' time we can do something. But generally speaking, I work with a 2 year time frame. Part of that is because, hey, you don't want to refinance every year. You're actually putting yourself backwards at least by a month in each case. So rather than doing that every year, let's look at it a longer term. And that's part of the actual lenders we choose as well. We're not doing something just for the cheapest or the most convenient for you. That's probably the better example. We want a cheap loan. That's all we primarily want, but always the other circumstances dictate what we can use.
And what about if they didn't have that 20% plus costs? Can you still get in there if you haven't got the 20%, or does it make it a lot harder, or what happens with a smaller deposit?
Different lenders are available. I usually recommend around 10% if you haven't got 25%, for example. So 10% plus costs. So the costs vary in each state as well. So that's something that just, again, specific cases need to be considered. But you can get away with as small as 10%, even less than that in some cases. I personally don't recommend it, but we can do it. Because once you've got, for example, a 5% deposit, you are going to run into costs, things like LMI and also higher interest rates, because there are less lenders that will consider that sort of lending situation. So less lenders means higher costs, or cost based on supply, which means between LMI and low deposit and higher interest rates, you end up paying a lot more per week, month, or fortnight with your repayments. So that's something we do need to, again, factor into the equation. Is it worth buying now, or do we wait until you've got enough saved up? It's something, again, as a broker, we work through those scenarios. Whereas, again, with a bank, they'll just go yes or no.
Okay, so you've just said LMI. Obviously, lender's mortgage protection insurance.
Yep.
It's a bit different in Australia to what most places are. It's a bit different to just mortgage insurance, like you'd have mortgage protection insurance in, say, New Zealand or the UK. What's the LMI here? How's it work? What's the story? You hear it all the time. People go, yep, we can get your loan, but it's going to have LMI.
Yep.
What's
Yep.
LMI in Australia? How's it work? And do you get it back, or is it a one-off, or what is it?
Yeah, so a bit of terminology there. So lender's mortgage insurance, it's a an insurance policy for the bank. Unfortunately, it is lumped on to the deal for the borrower, so they pay it, and it can be very expensive. And this is where I talk about the like 10% deposit. Usually in that space, your LMI premium might be in the vicinity of between $6,000 and $12,000. That's the most I've seen it charged at that sort of rate. If you've got a smaller deposit, I have seen premiums as high as $32,000. So it's a fair chunk when you're getting into the market, and it eats into your, it really does actually eat into your deposit options as well. So it can chew up some of your deposit. It's not, like I say, that's where I talk about 10% plus. It saves a lot of money and gives you a better rate. Here, like I say, it protects the bank. So if it all goes south, and the property has to be sold, it basically covers any shortfall or costs that the bank incurs in getting the money back from either you or from the house or that sort of thing. Unfortunately, it does potentially have a longer term impact on you as well, meaning that the insurance company may come after you, but that's another whole nother story.
It sounds like a big story for another day. That one that can get quite a bit. So with that LMI, you pay it up front.
Yep.
It's a whole amount at once, so it's not like we're used to where you pay a weekly like normal insurance.
Yep.
So once you pay it, say you become good, you can get an 8% loan or whatever. Do you get any of it back, or is it gone? It's a one-off fee.
You can get some of it back, and it depends on how long you've had the loan for with that premium in it. So let's say we're talking about 2 years you've had it, we refinance you to a better deal with a different lender. You can seek to get some of that premium back, but it's probably in the vicinity of about 30 or 40% of the whole premium. So the insurance companies in this case really do take a big chunk of that and keep it. The main thing is that the lender you've had the loan with LMI needs to tell the insurance company that your loan has been paid out, and then you can seek it back or seek part of that premium back from the insurance company. There's 2 companies in Australia. So it's not hard to find out who it is that's got it. And your broker should be able to give you guidance on who it is and perhaps even help you get some of that premium back.
And is there anyone that can be exempt from LMI, or is everyone just got to pay it if they haven't got the deposit?
There's different rules around that. Again, different states have schemes where you can be exempt. So essentially the state or even the federal government in some cases will cover some of that. But usually that requires you to be either a citizen or a permanent resident. So there are schemes where you can avoid it. Not all of the schemes are worth looking at, because often there are conditions, and I'll use it Victoria here. They've got a shared equity scheme. So essentially the state government takes a share of the property. So that's why you don't have to pay LMI. The government's backing part of the deal. So you don't have to pay LMI in that case. So there are schemes and options around, but like I say, it's again individual cases as to which is appropriate.
What about, is there any jobs or anything that you can get lower deposit without LMI? Like we get a lot of people, nurses, police officers, things like that, look at moving. Do they have any particular schemes out there, or?
Yes, some do. Often it's the lenders who deal with it are the ones that will look at what's called essential workers, especially after COVID. That sort of encompasses quite a range. So it could be emergency services, nurses, specialist doctors and things like that. Unfortunately, it doesn't cover a lot of the allied health. So for example, physios are one that there's only a couple of lenders that will consider them. So again, it does depend on the lender as well. So it's again individual cases.
But that'd be another one. If you're going to sit down and chat with a broker, that's where you'd want to tell them your career and what you're going to do. And there might be more options where you don't just go to a bank and say, look, I've got 15%. And the bank says, nah, not good enough. There might actually be an option out there just because of your job.
Yes, yeah, definitely. And that again, choices, that's the big thing. And it can save you a lot. As an example, I had a client who was a physio. He'd already had a pre-approval from one bank, came to me, and just by using that professional exemption, we saved him about $18,000. So it is worthwhile. That's probably a whole year's worth of repayments on your loan just saved in one hit.
They make a big difference just from making a phone call and going, hey, I've got this XYZ job.
Yep. Definitely.
So a big one that comes up a lot with when we help people buy property, they've got a home, say in the UK or New Zealand somewhere, let's just say $1 million home, they own it without a mortgage, they move to Australia. Can they use that home to borrow money to buy the home here in Australia? So can they ring up yourself or an Australian bank and say, look, I've got this home, it's worth $1 million. Can I borrow 300 or 400 grand as the deposit to use in Australia against my home that's back in whatever other country they've moved from?
Yeah. Generally speaking, that's a pretty flat no, because the case is lenders can only work within the jurisdiction they've got access to. So in this case, an Australian lender in Australia, you would have to approach a lender in, say, the UK or New Zealand or the US to seek funding or a loan against that property in those locations. If the property is on sale, there are a couple of ways to work around that. So the property is being sold, we can sort of speed up the release of funds, but typically you need to approach a lender in those countries. So
So for most people, they'd probably want to sort all that out before they moved and bring the cash with them rather than move and try and
best case to do it while you've perhaps got an income, got a job, all those sort of things, because that's always often the limitation is, hey, you haven't got an income, how are you going to pay this back? If the rent's covering it, that's certainly probably the best case. But yeah, the job and the income is always a way to repay the loan, so that's easy to get a loan in the country you're in.
So obviously you move over here, you bring your deposit with you, you're all cashed up, etc. What happens with like your credit score and stuff? Does that start just in the middle over here, or does your credit score follow you from home, or like how's that work?
With Australia, we've got a system similar to New Zealand, and I believe it's similar in ways to the UK, for example. UK again is a little bit different. They've got a very specific sort of way of working, but it's basically in Australia you start fresh. The only time it doesn't start fresh, or it may have some impact from another country, is if you've got a bad debt that's being followed or chased. But over here, you start at a neutral or a average level. And then from there, it can either go up or down. It goes down with consumer lending. So if you're looking for a credit card, car loan, personal loan, that will bring your score down short term. And then when you seek things that are asset purchasing, so buying a home, home is viewed as an asset in Australia, that can actually increase your score for both in the short term and over the longer term.
So someone's going to come here, they're going to start setting up again. Are there any big no-nos before they buy the home? Like you just talked about a car, all those sorts of things. If they get here and go straight into, say, Hyundai, where they've got to put nothing down, 2% finance deal, drive away in a new car, any of those sort of things, big no-nos from your point of view as a broker, when you're first setting up, if you want to buy a home, are there things you should have just talk with the broker before you do them and maybe put a bit of pause on? Or is there any real no-nos before you buy that house when you first get here, if that's your goal?
Yeah, I would engage with a broker at the earliest point you can, especially if you're setting up and those sort of things, because in Australia, it's not a level playing field with finance. So there's two reasons for this caution. One is the lending you might get through a car yard, not always, but can be very questionable. So you want some good guidance on that, and the broker that you engage with may be able to assist with that. And that's not a plug for brokers in this case. It's just like there are different rules. And that's often where I have seen people get caught. The second part to that is any debt you've got outstanding will reduce what you can borrow for a home. So again, that's got to be worked into the equation for what you're going to borrow if you're trying to buy a house. So one way or another, you're going to be discussing that loan with a broker. It's probably better to do it before you get it rather than after.
The things like, so I get here, I go out, look at 10, 15 different car yards, 5 or 6 of them run a finance deal for me. Are those sort of things going to affect me even if I don't buy the car?
Yes. Yes, it will. Each time, and as I mentioned with the credit reporting, each time you get an inquiry on your credit report, it will reduce your score. And it only needs to be, for example, 1 inquiry a month, and do that for 3 or 4 months, and that's going to crash your score in your credit reporting. And then at a later stage, when you're trying to get even a car loan or a credit card or even a home loan, we're going to have to explain all those inquiries for a start, but also because you've got a lower score, it may rule out a number of the mainstream lenders. And again, that will impact what your interest rate is likely to be on a loan for a home. So yeah, that's probably the simplest one. So don't go and get new furniture, a credit card, and a new car in the first few months, all on credit. because it's going to really mess up your credit score.
Is there any other big no-nos not to do when you first move? Are there any things that really could affect you borrowing, other than obviously getting a whole heap of credit checks or taking out a heap of credit? Is there any other big
They're the main ones. Probably the other ones is changing jobs or changing careers when you first arrive. That's again, take it into account, talk to your broker. Again, it depends on the lender that you're dealing with, or the lenders you're looking at. Some lenders will be okay with it, you'll need a lot more information about it. So if you've got a history in a particular career and you're changing jobs with, like, you might have been on a 3-month contract, for example, and then we're into a new job just as you're trying to get the loan, those sort of ones, as long as we've discussed it and the lender's okay with it, go ahead. But if you're changing quite dramatically in the type of job, that's going to perhaps impact who you can approach for a lender. And again, getting a loan, it might be a 6-month wait or a 12-month wait in some cases. The only other one that's we've got to be careful about is casual employment. That's always going to be a delay of 6 to 12 months with lenders. That's probably the single biggest no-no. Always want part-time or full-time work. And then the self-employed one, again, very difficult. You need a bit of history there in the tax system for that to be a viable way to get a loan. So again, it might be 6 or 12 months depending on the lenders again.
So the other one, I suppose it's quite common here in Australia when you apply for a job and get a new job contract, it can have probation in it, which for those that aren't used to probation yet, in Australia, we have a probation term. This is a period of time you can work for the company, and not they can dismiss you without cause, but it's pretty easy for them to move you on from that job if they don't think you fit. Does probation affect lending at all?
Some lenders, yes. Some are very picky about it, and that I'll stick to some of the big four for these ones. They can be very picky about it. And again, it relates to not just the job, it might be a couple of other issues in there as well. They'll be okay with it to a point, and if something else comes up, they'll go, no. But I've got several lenders at the moment that probation's not an issue, provided you've got history in that job role or career. They'll just basically first pay slip, we're ready to go on with a new loan.
So would it be one of those ones, if you've been headhunted or been offered a job before you even get here, would you be trying to negotiate the probation period as short as possible or not at all? Does it be a good one to get thrown out of a contract if you can?
If you can, some lenders will, like I say, some lenders don't mind. They will, if it's a continuing career, no trouble. But there are some lenders that will go, hey, we'd prefer to be out of that probation. And again, that might be something you negotiate with the employer where it's in the contract, but you might review it after the first month or 2 months or something, rather than, because often there's a probation period, especially with more higher level roles, it might be a 6-month probation. So maybe if you could negotiate to be 2 or 3 months long instead, that can be beneficial, but it doesn't always rule out the option of loans. Like I say, I've got a couple of mainstream lenders that would do that sort of one with a payslip. So
so in the all, it looks like it's actually not too bad for people to move in and buy a home and get some lending, as long as they work out the steps and do everything correctly. And like say, probably reach out to a broker maybe even before they've moved, start formulating a plan before they get in the country. Well, thanks for all your advice tonight. It's been great. Hopefully it's helped everyone out there that's listening. And if people have got more specific or general questions, where do they find you? Can they get a hold of you or?
Yep. My business is called Ruahine Finance. There's a bit of a New Zealand flavour to that, of course. And the website is ruahine.finance. So very simple. And from there, you'll be able to find me pretty simply.
Thanks for that, Damien. Hopefully it helps all our listeners and understand a bit more about getting a home loan when they first move to Australia. If they have got any more technical questions and they want to get in touch with Damien, although the information he just gave you then, I will put on our Facebook page, Keen on Australia. So you'll find us there. On our Facebook page, you will obviously find other shows. You'll find a bit of free information. You'll be able to ask questions. You can get in touch with us. You might be able to ask for who you want us to get on the show. You might want to be on the show yourself. So get in touch through there. That will let you have everything. We also have our free Moving into Australia guide you can ask for and get off our Facebook page. Please don't forget to subscribe to the show and rate us. That really helps us get out there so other people can learn and get information about moving to Australia. And we hope to see you on our next show. Coming up on our next show, we'll have a rental manager. We're going to talk to a rental manager and find out what's the story with getting a rental property when you first move. We've got a couple of people that have been here 6 to 18 months. They're going to tell their story. And we've got a finance broker that's going to tell us about buying cars, how whether you can or can't get a personal loan to buy a car when you first move. And then we've got some people coming up in the future talking about super, a few other bits and pieces. So if there's anyone you want on the show, let us know. Otherwise, we'll see you next time.